All right, well, I am very pleased to say the CPI and the FOMC are both behind us. No more for 2022. In fact, the economic calendar, I was just looking, is after this week is going to get dead quiet. Super quiet. There's actually no more really big reports coming at all. I mean, there's stuff like the Empire Manufacturing Index, stuff like that I don't really follow or know much about, but certainly people aren't on the edge of their seat chattering about the Empire Manufacturing Index. So 2022 is kind of winding to a close here. But I wanted to talk about what we've seen thus far, because yesterday and today were both, I think, pretty informative. This is the ES dialed back to earlier this week. In other words, it ends early this week. And so here we saw last week, which was the nice little dip and the recovery and then the surprise drop after the PPI. And we were kind of range bound. Now, following that, we got this base formed here. So let's pay attention to that. There's this base formed setting the bulls up for a lift. And so it starts to lift, as you would expect. And then Tuesday and the CPI hits. So we've got our bullish base here. It does one last little, almost like a cup with handle kind of thing, and it starts easing up, and then it skyrockets. And then, as I've discussed ad nauseum, and it really skyrockets, just explosive move. But then on Tuesday, it unwound all of that move. And interestingly, look at this. It fell and exactly matched this. So this was resistance, 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 resistance. And then once it broke through here, it became support. So there's support. So let's pay attention to that. That's 4026. And that was Tuesday. And so that's all well and good. And then the stage is set for the FOMC the next day. And the market climbs in anticipation of that. And it gets stronger and stronger. And then, as you know now, we started to get really wobbly here. And in the midst of that craziness, and I was just really puzzled, particularly about this, because I was listening to the questions and answers, and I could not divine what would have justified a rise from 3997, we actually got back down to the threes again, up to 4071. That's a 74 and a half point rise, based on what I'm not sure. And like I said in my show, it was almost as if a reporter asked Chair Powell, will you do anything in your power to prop up the stock market and make it go higher? And he said, absolutely yes. I mean, that's the kind of question and answer that would have compelled that kind of reaction. Instead, it was just, they're just yammer. After the fact, apparently what made this happen was that he started dropping hints that, in spite of him repeating the 2% inflation target 1,000 times, he sort of hinted that maybe we'll drop that next year. So that was kind of interesting. And that's what caused all of this. But in the end, the market actually wound up down for the day. Not dramatically, but, and interestingly enough, remember that support we talked about earlier, this line. Well, you'll note that unlike Tuesday, we actually did travel briefly into that area a few times, pounded below that line. Now, as I've been recording this, the market just opened moments ago. And we can see here that the initial thing is a little bit of softening. But I don't follow the option stuff and the big OPEX expiration, et cetera. But, it seems generally agreed that once this week is past us, the market will be permitted to plunge again, because there's a trillions and trillions of dollars of notional value of options that have a tremendous incentive to keep the market propped up. And so Thursday and Friday may be subject to that, which to me suggests Friday afternoon, go crazy buying puts near the end. But the good news is that neither the bullish friendly CPI nor Powell's hints about reneging on his inflation pledge did anything positive for the market. Because on the whole, here's the bigger picture. On the whole, this is not exuberance right here. Even at the very, very most high point on Wednesday, it didn't even approach what happened on Tuesday. So this is looking somewhat wobbly. So at this point, as before, two lines need to be broken. The first one is this one, and the damage is already starting to happen. You can see right there. What happened post-Powell today begins progress on that important work to get us pounding down into that zone. The next goal, we might have to wait till next week for this, is a failure of this low, which would set things up for some real selling, because that, whereas this line that I've been focused on for this presentation is pretty small. Look how tiny this pattern is compared to this monster right here. So again, this is what all the activity this week has been about, this little bitty setup. This one spans many, many, many weeks, months actually. And that's what this line's all about. So if we can get below, 39.46, it basically ruptures this setup completely and opens up all this space here for further droopage. Okay, well, we spent almost all our time on ES there. Just a couple of quick items just to see if there's anything worth looking at. Here's the NQ, kind of the same situation here that I spoke of yesterday, except we've beaten things back somewhat. I had made mention of the bullish prospect for this pattern here, but the cool thing is that it failed, and you can see the failure taking place yesterday, I believe. Yeah, this here. This was the breakout, and it completely died. And this line was respected yesterday, and it was damaged today quite badly, just like with the ES. And finally, with RTY, it's being, look at how the lines are working. Look at that. How close is that? Like to the penny, absolutely to the penny, right there. So it continues to be not just range bound in multiple levels. You can see how these lines are being adhered to, because over the course of all these weeks, these lines have completely defined support, resistance, again and again and again. So as with 39.46, the RTY, we want to see this taken out. So now that the FOMC is behind us, maybe we're starting to get a little bit of a chance. But like I say, post this week, I think things will really let loose. And post this week, there are merely 9 trading days left. One last one. Let's just take a quick look at crude oil, just to see if anything interesting is going on there. A little bit interesting, because if you go back to all the way back to the daily, you can see here, I've put this line here it's a little sloppy, as you can see, but I've put this here as my best representation of this bearish formation. That is an inverted cup with handle. And today we fell hard early in the day, and then it recovered and went higher. But what's interesting here is that we are still below this line, which is that big line you just saw on the daily chart. So this is still okay. All right. Well, anyway, glad it's behind us. And next couple of days, I assume, should be much quieter, and we don't have to wait on the edge of our seats for these announcements.